We were just talking during lunchtime about the question in the balance of the room and how many people here are representing oil and gas and the upstream side of the business, and how many are truly in the renewable environment. So I'm wondering if we could have a show of hands of how many people are still very much oil and gas and that true side of the industry. Okay, good. So I'd say it's about a half and half split. So what that raises is a couple of questions. The first one, and Geeta, if I could start with you. The industry as renewables is one that is, I think, the future state. But we can't give up on oil and gas. And the challenge around the investment side of questions is how do we play to a stronger environment that allows us to develop beyond what we currently do without giving up on what we do very well so far?
So I think just taking a step back, as a Calgarian, oil and gas is very, very personal to me. It's very personal to a lot of the people in the room. And it is something that pays for, it's a livelihood of ourselves, our friends, our family. And it's wonderful to be at a conference like this and hear about all the disruptive trends, but it's also very scary. And the reason it's scary, and to your point on how you protect for it, is the challenge in Calgary is just scale. And how do you manage the scale of the businesses that we have? We have about 5 oil and gas companies that have greater than 100,000 BOEs a day. And so how do you actually manage for scale? So just to give you guys a little bit of background so that you understand the lens through which my comments, and I think everybody else will give you theirs, comes from, is I run a company called Grafton Asset Management. We're a Calgary-based energy investment firm. We're a little over $1 billion in assets under management. We started about 7 years ago. The bulk of our capital is oil and gas investments. So we have our 2 most active investments right now are a partnership with a company called Tourmaline Energy in the Peace River High. And then we own and operate an asset called Pipestone Oil Corp. But last year, I went to a conference very similar to this one. It was called Singularity, and it was all around energy disruption. And when I came out from underneath my bed, so it took about 4 days, one of the things I did is I looked around and said, oh my goodness, what do we need to do? What do I need to do to A, protect my existing cash flowing businesses, and B, at the same time, be aware and be able to pivot my business and expand it to deal with these exogenous market forces that are affecting our industry. So we have over $900 million in oil and gas. We're spending $200 million this year in CapEx on our projects. And so clearly we're making money in the business and we love it, and we've hired more than, gosh, we've doubled our workforce in the last year, highly qualified petroleum engineers, geoscientists, investment professionals. But also last year, one of the things that I did is I made an investment in my first renewable power project. Well, it's the infrastructure that supports renewable power because we couldn't figure out how to make money in renewable power. So we decided to sell the picks and shovels instead. And so we made an investment about a 500 megawatt pumped hydro storage facility with an associated transmission asset. And this was a big deal in our community. So why are you guys doing something that's non-oil and gas related? But I think what I'd like to leave you guys with is, especially for those of you who are oil and gas people in the room, is disruption in our energy business is here. It's happening. Our primary industry, our $6 trillion #1 global industry is getting disrupted. These trends are real. And it's not just an emotional argument. If it was just an emotional argument, then, okay, make your own call on your own ethics and your own emotions. It's also an economic one. And because it's also an economic argument, eventually economics always wins. And when you double scale and capacity in anything that you do, like in solar, and costs just drop by 20%. And in oil and gas, there's a great chart in the IEA, clearly one of the most forward-thinking organizations out there, that basically is fantastic. I don't know if you guys can see this. Well, I'll try and explain it to you. It basically is a chart that just on the x-axis is time, and on the y-axis was the adoption of installed solar capacity. So T minus 10 years ago, the chart looked like a very flat line, barely close to the x-axis. T minus 9 years ago, the chart grew a little bit. So the slope of the chart grew a little bit. T minus 8, it grew a little bit more. 5 years ago, that line was about this big. What this is basically saying is the IEA is modeling, or the industry is modeling, a non-linear growth curve with a linear function. And that is scary. And we, all three of us, had the ability to be at dinner last night with Mary Moran, who hosted a Calgary Economic Development dinner. And she's a fabulous and passionate investor and into the Canadian space. She is so passionate about making sure that Calgary exists as a city. And one of the things that was really interesting about it is that you have a massive amount of experience in Calgary. And experience is wonderful because it allows you to identify patterns, and patterns are important for efficiencies and to have a higher chance of success. But when the game changes on you, that also can create the dark side of pattern recognition and experience is that it can start putting blinders on you, and those blinders then can become bias, which allow you to miss. And that's the one thing I would say, please don't miss this.
Okay. David, you're dealing with the whole of North America with your responsibilities. What is your perspective when it comes to what Geeta is saying and building on that idea of how does oil and gas continue to be developed and supported while investment in renewables becomes more essential? Where does BlackRock see the future going?
Yeah, so BlackRock's going to look at this in terms of an all-of-the-above approach to the energy space broadly. We launched our first strategy into renewable power in 2011, and I would get 3 slides into a deck before I'd even mention renewable power. We just completely talked about it in terms of infrastructure and the long-dated contracted nature of the assets. And I think, you fast forward now 5 years later, and we're still out and implementing this strategy, but it's very much a front-foot discussion around renewable power. One of the things that I like to say, it's not alternative energy anymore. It's just part of the overall energy story. And so as you look today and you start to begin to project 5 years into the future, you have to pay attention to where all the trends are headed. I mean, in the last 8 years, we've seen the cost of wind power come down 67%. We've seen the cost of solar power come down 86%. I mean, these statistics are real. This is part of an overall energy portfolio. So as you think about yourself sitting here in Calgary and you look south to, say, a state like Houston in the United States, and you see what's happening in Mexico as they're going through a massive reformation of their energy infrastructure, and you really have to think about it in terms of both all of the above and globally. You have to think about where do you fit into the overall global picture. Because sort of despite some of the rhetoric that's coming out of some of the politicians, I mean, the reality is that this is a global business, and if you aren't thinking about it and paying attention to it globally, you're going to miss something that's happening in it.
Okay, and Andree, Lise, you deal with an awful lot of challenges, but you've also invested enormously in the VC side of things. There isn't a shortage in capital in the market.
No, I think it's no shortage of capital, especially in Canada. The real shortage is about smart money. I think the question, it's not money, it's how you can bring the good co-investors at the right timing in a technology company, and how you can build a real foundation in this company to make sure you will be enough attractive for talents. And one of our challenge today, it's not money. With our companies. For good projects, for a good team, for good entrepreneurs, we have money. Now it's how we can deploy properly with the industrial world these new technologies. Because the problem for the clean tech innovation, and can be in the oil and gas application, can be in renewable, it's a real industrial play. It's not an application on your iPhone. And you need BMW, you need Caterpillar, you need to have big guys around the table. But if you want to extract value as an investor, as a VC investor who will take risk, like we are, we make sure you can dance with the beast properly. And I think, and we had an amazing forum 2 weeks ago at Cycle with our investors, and we have a special panel with different corporate ventures. And the theme of the session was, so you think you can dance? And I think it's about that. If you want to dance with BMW, if you want to dance with oil and gas company, you need to understand how they can accelerate your value, and you need to understand how you can help them to be better in this world. And it's a tough dance between an elephant and a mouse.
So to be slightly provocative, you raise a question where if we agree that it's not a lack of money, the capital exists, then there's something else that's lacking. And I'm very aware, sitting in Calgary, Alberta is the most can-do province in this country. It has a greater entrepreneurial spirit than anywhere else, and it gets stuff done. Right? But as I also look at the challenge and the constipated approach that Alberta is now feeling subservient to a federal government to decide whether or not its fate on pipelines is something that Alberta will be allowed to satisfy its own destiny on, is extraordinarily wrong. So I will say that, I'm not asking the panelists necessarily to get into politics. I think that becomes a slightly irrelevant, chaotic environment. But in terms of your challenge, if it's not a lack of money, what is it? Is it regulation? Is it will? Is it leadership?
My view changed a little bit over the last 3-4 years because now we have a chance to manage money in China. Okay, we have a Cycle Capital China group, and I am a Chinese investor. And it's really interesting when you spend time in China and you understand what kind of lesson learned I can bring in Canada, in US, in our companies after to be exposed to the Chinese practice. And you know, the real challenge for Canada, and it's not just in Quebec or in Alberta, I will say it's coast-to-coast challenge. We are more in the spirit to build grant-entrepreneur than entrepreneur. Because grant-entrepreneur, they will ask for more money. They will ask for more programs. What we need, it's the real policy making, and it's what China provides to their people in the market. And they are very, very fast to change their legislation to make sure they will be very open to the new technology, especially in the green tech in general. And I think what we need to change, it's our view about entrepreneurship. I think we have lessons learned to take from from our US friends, from our Chinese friends, because they are ready to take risk. And it's not just about entrepreneurs, it's about investors. And I'm a fundraiser. I raised close to $1 billion in the last 5 years for different companies or for my funds. And you know, it's really tough to convince people in Toronto to put money in Canadian venture cap. It's tougher than US. And it's about our DNA. And we need to change it if we want to be part of this energy transition and make sure we will keep the talent we have in the oil and gas sector or in the classic chemistry producer in the next economy. But it's all about transition, it's all about money, and it's about talent and smart money.
So David, your challenge in New York, presumably from where Andree Lise would paint the picture, and Geeta talks about the scale and the fact that Canada is a relatively small market. Is BlackRock still interested in investing in Canada? Does it see the challenges of the market here to be not worthwhile in 10 years' time, 15 years' time?
No, not at all. Frankly, just the contrary. Canada is a difficult market. I mean, the theme has come out a number of times from the standpoint of there is a lot of money in Canada. And I think for the right projects, for the right opportunities, that capital has a pretty efficient path to finding its way to those projects. And then, as there always is for domestic investors, there's typically some tax advantages that also make it hard for an international investor to be competitive. But that being said, I think that there are pockets in Canada where there are really unique opportunities and where there is the opportunity for innovation. And that is where we seek to find those opportunities. When Ontario had their feed-in tariff, we made investments in solar projects there to take advantage of sort of some early mover status. And so these are the areas, I think, where the international community can come in and provide some leadership in terms of providing capital as things get more proven, as things get more industrialized, if you will. I think that then you see plenty of domestic capital here in Canada.
Okay. And Geeta, I did a little bit of research, and there is a quote that you gave where you said that you were worried about the future of...
Did it begin with an F?
Future. The future of the oil and gas industry in general. It's going to be a great business for a period of time, but I do look at it as a sunsetting business, one where we will see competition and disruption from outside our industry. There's obviously a lot of geopolitical environments, changes going on with respect to Iran. You're seeing the prices increasing, improving, but still not stable. Do you see oil and gas as a sunsetting business?
Tough question.
That's why we're here. We're disruptive.
Okay, we'll be back in 5.
I do. That's the simple answer.
Good for you. Good for
Should I
you.
now put the F in front of that? I do. And that doesn't mean I don't think that there are opportunities to invest, and it doesn't mean that I don't think that there will be opportunities to invest in hydrocarbons for a period to come. However, this is again an economics argument. When you have, it's Swanson's law, right? It's that experience curve I talked about at the very beginning. When you have 1 billion people in the world without access to electricity, and those people are all living in Africa, China, India, and other parts of Southeast Asia. And these are all countries that effectively right now today, the ones who are lucky enough to have importing infrastructure are net oil importers. They drive the bulk of our 1 million barrels a day plus per year of oil demand that we see. When you have those people all aggressively trying to find a solution, and they are. There's a great quote by Sheikh Ahmani, Zayed Ahmani, who is the former energy minister, oil minister for Saudi Arabia in the 70s. And he actually said, the Stone Age did not end because of a lack of stone, and neither will the oil age end because of a lack of oil. This is not a supply problem. This is a demand problem. And when you have solar power, for example, being installed, so 20 years ago, it was $70+ per kilowatt hour. You had this perfect confluence in Germany of policy, technology, and capital that started to drive the cost curve down on solar. And then you see China, absolutely a command and control economy, which I'm glad I don't live in, but it's a command and control economy, and it has the ability to drive and legislate change, and they did. They mandated solar adoption. And while, as part of the energy complex, they were investing in coal, they were investing in oil, oil import, they were investing in trying to find sources of hydrocarbons within their own borders. So they were trying to do all of the above. And what happened is you saw, because again, Swanson's law, the experience curve, you saw as installed capacity in China grew, the cost of solar went down. As the costs come down, you get to tap into new markets. As you get to tap into new markets, demand grows, and it becomes this incredibly virtuous cycle. And that virtuous cycle is what worries me. That virtuous cycle is what is going to disintermediate us, because when you have today, last year in the UAE, you saw utility scale solar installed at sub 3 cents per kilowatt hour. This is cheaper than natural gas, guys. That's scary. And so when you have now that's one of the sunniest parts of the world. But this started in Germany, which is cloudier than Calgary. It's cloudier than Canada. And so this virtuous cycle starts coming in, which starts creating disruption. And that is the definition of disruption in an industry. And so for oil and gas, and to answer your question, do I think it's a sunsetting industry? Yes. Do I know how long it's going to take? I don't know. But what I do know is when the brand of an industry has become so awful. As you heard yesterday, even Richard Branson called us the tar sands. And so when a brand of an industry is affiliated with something that is not a positive thing, when you have a disruptive technology that appeals to both ethos, emotion, as well as economics, and then when you have the most rapid adopters or the drivers of that incremental barrel buying it. China last year shut down over 100 sanctioned coal plants, over $85 billion of invested capital lost. India, blanket cancellation of every single coal plant out there because the cost of solar in India is in free fall. And so that will affect us. And so I think there's a couple of things that I would do here in Calgary, but just to finish off on that one point before I get there, I would say, yes, I do believe it is a sunsetting industry. We do have to worry about it. We do have to be cognizant that this is happening. And then we do have to look internally at what we can do here in Calgary. And I think there's 3 things that we can do. Number 1, it's innovation at the drill bit, which Calgary has been front and center at. We've done a great job of increasing our technological capabilities. That will end eventually. There is diminishing returns to investment in fracking and what you can do there and drilling technologies. But what we do have, which we're very lucky to have, is a massive resource potential. And so 3 years ago, no one even knew what the East Shale Basin in the Duvernay was, right? But today, we now have a massive oil potential that's probably as big and as economic as the Permian and the Montney. And so I would challenge you all who are in the room, who are in oil and gas, is as you're thinking about protecting your core business and your core cash flows, number 1, what rock, sort of pun intended, have you not overturned? And so what is the next basin where technology can unlock potential? So that's number 1. Number 2 is in Canada and in Calgary specifically, we are desperately in need of innovation in the financial structures. Our capital stack here in Calgary is about this big compared to the capital stack around the world. We have lived on an IV drip of equity and 6-month revolving, 6-month recourse on-demand bank loans. You cannot plan a business in 6-month cycles. And so number 2 is we must adopt different spots in the capital stack. If we don't start looking at even term loans on our RBL, second lien vanilla pieces of paper, any type of innovative alternative structure to finance our assets such that we can plan for the long term, we will have challenges. So that's the second thing I would say that we can do. The third thing I would say that we can do is we can start looking and investing either personally or if we have the capacity within our business or within our team at alternative sources of energy or other places in the capital stack. What does Alberta have that no other place in Canada has, except no other place in North America other than maybe the Utica? We have cheap, cheap, cheap natural gas. And right now, our natural gas, you can go out and contract it at 4 cents a kilowatt hour. You could probably buy it spot for sub 4 cents per kilowatt hour. If anybody who's in upstream E&P that actually has cogen facilities, so installed infrastructure that's already there, it costs about $20 per megawatt hour, or about 2 cents per kilowatt hour to run. So what is one of the primary users of power besides marijuana? It's data centers. And data centers, whether it's for cryptocurrency, whether it's for processing Amex transactions, whether it's for processing Amazon's logistics operations, whether it's for combing through NASA data, this is so utterly crucial. And as I said earlier, Mary Moran from the Calgary Economic Development Council is working hard on trying to get that here. But I would challenge you to look at your businesses and see what else we can do.
Yeah, there's a lot there to unpack to either of you. David, do you see anything in particular, Andree, Lise, do you see anything in particular from that you would grab, or are there specific investment areas that you would like to get into in the months and years to come?
Yeah, I can share a story about one of our deal, and I think it's one of the most promising deal we have in our portfolio. Essentially, we invest in a seed business. It's the name of the seed is Carinata, and it's the sister of canola. But this seed is really interesting. It's not a GMO, and it's no competition with food because it's grow when nothing grows. And we are using the same system than canola. We don't need to reinvent no infrastructure. And when we crushed it, we have two co-products. One is biojet fuel, and we just made an amazing flight between LA and Melbourne with Qantas, with the CEO of Qantas, with 10% of this Canadian innovation, and we can decrease with this innovation by 100% greenhouse gas emission. But this oil can be blended with your oil. And at the end, it's a better way to fly because you can decrease sincerely the greenhouse gas emission, and you are in business because we need refinery, we need all of the system, we need engineer, we need chemists around that. The other co-product is a meal. It's a perfect meal, it's a protein, and we can feed cows, poultry. It's high proteinic meals, and it's really interesting because we signed a contract with the big guys in Europe for 140 million. And why they want to buy this meal? It's because the protein window in Europe is stacked, and they can not add more protein for their cows, for their poultry. And with this new protein, they can add more cows, poultry, fish. And you know, this technology comes from Saskatchewan. And as a Canadian investor, we put money in. And actually, we have discussion with a super interesting Australian investor. And you know, it's working. It's their risk. We just need to deploy properly with WestJet or Air Canada, but I think it will be faster with WestJet, okay? I cannot say anything else in this room.
Air Canada, we're not happy till you're not happy.
Andree, Lise, just before David, before you jump in, what was the way that, how did you discover that? Was that using universities? Was it R&D?
I will be very terrible, okay, with that. If I look at our deal flow, we are reviewing around 500 qualified deals from the planet in our sector, okay? And generally, the majority of them come from the garage. This case, it's special. It's from a center of research. And we have a chance to be linked with all VCs around the planet. We have a chance to be linked with, I will say, very amazing people in the ecosystem on Earth. And we receive 2-3 deals a day. And it's the way to do that. And you need to be outside, and you need to speak with entrepreneurs, and you need to be patient, and you need to listen, help. And at the end, after 3-4 years, you're ready to make an investment. But it's a long shot, and we need, I think, as a Canadian, to be more supportive of our entrepreneurs. Because we are really fast to say it's not good. We need to be patient, help them, give them new relationship, open your Rolodex, if I can use this, this way to say things, and just make sure our entrepreneurs, their team, will be in contact with the rest of the world. It's a good thing to spend time in Texas. It's a good thing to spend time in Shanghai and speak with other entrepreneurs or other investors to understand what will be the next step for your business.
Thank you. David.
Everything I do sounds boring now after that. No, I mean, the only thing that, as we think about it and as we think about the future, one of the quotes I like to steal that I heard at a conference was, if you brought Alexander Graham Bell back and showed him an iPhone, he'd have no idea what it is. And if you brought Thomas Edison back, he'd walk around and say, yeah, I remember when we put that transformer up on Broadway back in the 20s. The electrical grid looks the exact same. So as we're thinking about where does power generation fit in to the future, we're really trying to think about it in terms of what does that future grid look like, and what will be the technologies, whether it be behind the meter solar, whether it is storage, whether it is transmission, DC transmission, bringing wind from windy areas into populated areas, and then what does that utility model look like on the other side as well, as we start to think about sort of a customer out model where utilities are actually providing services and not just delivering commodities.
I think we are very close to being a revolution in the grid, because if I look what we have on our table today, and I can project where we will be in 20 years when I'm saying technologies, we just revised over 170 deals in the battery flow sector last 2 years. And we share that with two of our investors in our fund, Hydro-Quebec and Brookfield. And they were very surprised about the cost, because what we are looking actually, we are in the same position with the battery flow and distributed energy and data-driven software, etc. We were 10 years ago with solar. And I think that now the real game changer will be IoT, AIs, a data-driven platform, and how we can introduce that in our grid properly. And it will be a big challenge for state. It will be a big challenge for government to manage the new legislation, because the profile of customers, including my kids, they don't want to be linked directly to the utility. They want to have a choice and change totally the way to doing things with utilities. It's not a relationship, an on and off system. It's something else. It's about the way you live. And I think we need to think about that as an investor, because things will change a lot in the next 10 years.
I think that is such a key point. And I think the conversation that the two of you just had about the grid in power is exactly what is happening right now, or you guys as oil and gas folks here in town need to be thinking about, as all of us, I include myself in the mix, need to be thinking about in terms of how do we protect our existing businesses and make money in them so that we can hire people, feed our families, help our neighbors, build our community, while we're looking beyond that. So I don't know what the time frame is. There's some time frame, 0 to X years, where grid enhancement technologies will be interesting, will make money for people, for investors like these guys, for entrepreneurs like yourselves. But what comes after that? Think about changing your mindset and looking for leapfrogging technologies. What comes after that is not a better grid. What comes after that is the full democratization of power, where everybody's home is their own power station, where your phone is your power station, where your car, your electric car, is a big battery that you hold. It's kind of the argument that I've had with Ken here in the room in the front over there, which is, who's better? Who do you invest in, Walmart or Amazon? And who's going to win? A year ago, anyone would have said, of course, it's Walmart. Today, Amazon has invested in revolutionary logistics capacity. They've located themselves so strategically. They have injected technology to understand your buying preferences, such they are the best fulfillment engine out there. So how can Walmart compete with that? Don't you see the sunsetting of Walmart's industry? And if you look at the steps that they're taking, it's fascinating, and I highly recommend that you read about this if you get a chance. So you have, I think, as Calgarians, we have two choices. And we don't get to do one or the other. We have to do both. And those two choices are, clearly, we have to protect our livelihoods. We have to protect our existing cash flow businesses. We have to continue to take advantage of the opportunities we see in the oil and gas sector, because Canada is a resource economy. We're not yet a pot economy. We're close, but we're not yet there. I am trying to help, by the way. So I did not just say that in publicly, so just ignore that. Chatham House rules, he said it. It was all from BlackRock.
Definitely not. Work for yourself. You can say whatever you want.
There's fundamentally, our economy in Canada, although we're a first world nation, we trade like the emerging markets. We trade on fund flows in and out of our country. And those fund flows, which drive our equity values up, which drive our stock markets, are independent of the fundamentals of any individual industry in Canada. And so when you have that, because we're 35 million people, we don't have the breadth or depth of capital markets to launch and grow our industries ourselves yet. We're getting there.
Okay, so we have a few minutes. I want to get each panelist to one more comment. And it's something that's bigger than anything that is being discussed in our own industry. And that is, I believe that if we were to put our commitment into this as private organizations and not looking for the public purse, we could actually launch the 21st century space race here in Alberta. And that space race is not about going to the moon. We've done that. It's about creating a brand new environment for the economy and forcing through disruption. And being in the newspaper business, I kind of know what that means. And abandoning the idea that what we've done in the past is always going to be good enough. It isn't. And instead, pooling our resources, that independent economic modeling where we remove our biases. We can still maintain competition, still create the discoveries of seeds, but do something that's different. We have the money, we just need the leadership, and pull that together, base it in Alberta, and change the world. Is that possible, or am I smoking some of your pot?
It's not mine, it's his, it's not mine, not mine, not mine.
I do think we need a new space race, and I think we need to frame it that way. David, you have a lot of money, what do you think?
I mean, I think that goes to the all of the above discussion. I mean, it sort of brings us full circle, David. I think it really speaks to, and it's been talked about pretty broadly here, is, really respecting the resources that are available, taking advantage of them and being efficient, and then overlaying technology with that to ensure that we are, not just in Calgary, but frankly, in the developed world, really orienting ourselves towards the efficient use of those resources and taking advantage of those resources to put us in the best position to both protect the environment as well as continue to grow and prosper and feed the growing population. And all of those pieces have got to ultimately fit together. And I think that as capital providers, that we have obligations to to be patient and to take a longer view. Our chairman and CEO spent a lot of time to put that message out there. We have to pay attention to what's happening more broadly in the markets. We have to think about those externalities. And I think we also need to partner with our policy providers. If you think about some of the things that are innovation that came from the internet, in a lot of ways, if you break it down, it was really just a way to circumvent regulation. I mean, Uber is no different than a taxi, except you've got individuals financing your rolling fleet, and you've got, you don't have to buy a medallion anymore. It really is the app that's the innovation there. It's really not the company. And so, we have to think about this in terms of regulation, because regulation is coming to the technology industry in a way that's going to disrupt that, and they've got to begin to prepare for that.
Okay.
And so all those pieces, I think, have to ultimately fit together.
Okay. Andree, Lise?
100% agree with David, but just I want to share another level of discussion. We just did 2 years ago a very amazing study about who owned what in terms of intellectual property around the world in clean tech, and it was shocking for me and changed totally my perspective. I will take an example, not the oil and gas one, but I will take the ag tech sector. And we review with public entity and private entity who own what. And 92% of the ag tech, clean tech application of family patents around the world are owned by a Chinese entity. They make their job, we didn't. We are really good to brand our research. We will love to be on Facebook. We want to be on LinkedIn. We're a good brander with flip-flops in the valley. But the reality is they own it. And if we want to be in the game, and if we want to be part of this new economy, and if you want to protect your cash flow and take care of your people, be in this race rapidly.
Okay, and last word, Geeta?
I think my two colleagues up here have said and brought up some really, really good points on those last 2 points. I have never been more optimistic about the city. I think that we have a group of highly, highly entrepreneurial folks here who will move to where they see opportunity. And just look at this conference. This is an inaugural conference on energy disruption, and half of it, more than half of it, is oil and gas people, and more than half of it is not. This is amazing. Would this have been unheard of even 2 years ago? And thank you, by the way, Graham, for doing this, and for all the organizers. This is amazing. I've never been more optimistic about our city. I don't know if the sunsetting in oil and gas is a 10-year, 20-year, 50-year process. But if you have people like this and assemblies like this where you can come together to exchange information, exchange ideas, find capital. They have more money than I do, but we're here, we're local, come talk to us first. Yeah, I think we're absolutely going to be part of and a key part of that space race that you brought up.
All right.
We just shouldn't eat the gummy bears, right? Those are...
Thank you very much to the three of you for a stimulating conversation, and thanks to all. Thank you.